Morning all, how are we all doing? Sorry, I'm a bit late this morning. Rushing around, coding stuff, things going on. Morning everybody, how you doing? John, everybody. I'll go through the list quickly. Alex, Diamond, Anna, Marco, Bellino, John. Bellino? Yeah, John. Wacky, David, Monkey Man. Oh, I can't say that one. Special. Saraj, Henry, Steve. Morning. How's everybody doing? $80 away from a My Forex Funds live account, David. Well done. Good job. Keep going. Morning, Fagenia. Morning, Danny. $80. Eek. Hopefully you're on the pound long. So we had just had the news on the pound, which is pretty good. So CPI figures 10.1, which is obviously not good for us in the UK, but it's good for the pound. So that means the interest rates are going to go up further because they missed their target by 0.3%. So obviously inflation is what drives interest rates. Interest rates is what drives currency strength. Therefore, that will be stronger pound. Whether or not it's sustained or not, we will see, but certainly had a nice bullish reaction to it this morning. There's no other news today. The only other news we've got is kind of tomorrow, really, 11:45 p.m. CPI for New Zealand dollar. So we should get a potentially strong or weak reaction, obviously, on the New Zealand dollar overnight, depending on obviously what that number comes out at. So no other news today. That's it. So CPI, really, that's tomorrow because it's after market today. So just looking at what the news has done impact-wise, UK financial markets show 95% probability of a May rate hike versus 80% on Tuesday. We knew it was going up anyway. It's just now a case of now inflation has gone up rather than down, which is the opposite of what the interest rates are meant to be doing. It means they have definitely got to hike those rates a bit faster. So 14 basis point hike to 5%. So if we have a look at where we are with the fundamentals at the moment for the pound, we have 4.25 and 10.4. So 10.4 was the previous inflation. That is now gone down to 10.1. So that's dropped. Interest rates are sitting currently at 4.25. We went up by 0.25% last time. Obviously, that wasn't enough. Everybody else did 0.5% virtually. So, yeah, basically, we need to increase interest rates. We're going to end up around about the same US dollar and New Zealand dollar. We're going to end up at 5s, possibly more. If you look at our inflation, we're way worse than everybody else in the world. So they've just cocked it up massively, royally. This is a mess. So basically, we are just waiting for the Bank of England to sort of say something about it this morning. We haven't got any scheduled news. So Chancellor's come out. Oh, there we go. Chancellor's come out and said CPI figures reaffirm exactly why we must continue with our efforts to drive down inflation. Inflation's going up, so we need to drive down inflation. Good one. So yeah, basically there you go. Other news overnight. Don't think there was an awful lot overnight. Nothing else. So that's it. That is your news. Market is about to open in 2 minutes. So there we go. So that won't have much effect on the bias scorecard because inflation is basically still where it was. We were the highest in the world. We are still the highest in the world. Therefore, there's no impact on the bias scorecard. That will remain exactly the same. Bullish pound. Although I'm bearish pound generally, but who knows? Right, so we've got a few ADRs. Banked 0.6%, so banked 1.4% yesterday. Let's go through the yesterday's results quickly before we get on to other stuff. Opening range breakout on the DAX we need to keep an eye on as well. So there is your, wow, look at that, boing, big pre-market sell-off. So this is your pre-market 5 and 15 opening range break if you're playing that this morning. So yesterday, ADR reversals did 1%, sitting in 1.4 drawdown. Done a little bit of drawdown control this morning on one, which was that. So a little bit of drawdown on the euro pound because there's a buy on the euro pound at the moment off of an ADR. So that one's gone into drawdown. A little bit of DD control on that. So 1% banked yesterday, 11% on the month. H1 mean reversion 1.4% yesterday. So virtually got all those losses back from the previous day. 0.5% just over banked today. 5.4% DD sitting in that one. Still nothing getting to levels I'm worried about with anything there. That pound yen short might get into a bit of DD today. CAD yen, so we're still waiting on yen basically on that. 4 hour yesterday banked 1.3%. Drawdown control done this morning to the tune of 0.5% on the euro yen and the pound yen. So basically some yen drawdown control done. That's just sitting in 2.7. Hedging did 0.3%, so that's done nearly 10% this month, sitting in 11% drawdown. And my funded accounts, look at what they're doing. Come on. Mean reversion has banked. Woohoo! Banked something finally on this account. So banked a little bit on that one. I assume that's probably something pound related. Oh my God, this is so slow. Pound CAD, yeah. So banked a little bit on pound CAD on that one. This is running the ADR set file, this other prop account. So this is sitting in 2%, drawdown done 3%. So 2.64% yesterday, that's good. So there we go. There's your opening range break. So far, that is your pretty much your 5 minute and your 15 are pretty much the same if you're trading pre-markets today. That's broken out to the downside. Am I trading that today? Something there. Got stopped out on that. It's only taking one trade again. Did I not set that up properly? Oh, I didn't. Oh my God, you're such an idiot. Here we go. So ORB short, basically just tiny little stop out on that one. All we've done is push down and come back. So see if we get the break to the upside. We'll have a look at that in a sec. Right, there we go. That's everything covered. Morning, who everybody I haven't said hello to. Stevie, John, Danny. Can't remember if I said hello to you, Danny. David, I'm long euro odd and short odd CAD. Okay. Morning, Dreska. Morning, Adam. Morning, Amar. Morning, Virginia. Do countries all measure inflation in the same way? I guess so. Yeah, I would assume so. I'm not 100% sure how inflation is measured. Inflation is basically measured on cost of goods typically. So if you have a look at it, gives you the definition in there. Look, on the CPI, look. The change in price of goods and services purchased by consumers. So there's a general, like food and petrol and energy and so it's everything you spend basically. So whenever you go for a mortgage, they say, right, what's your outgoings? It's your outgoings. Everything that you class as outgoings, non-disposable income basically. So I'm pretty sure it's measured virtually the same way around the world. There'll probably be slight variations, but I don't know. Never really looked into it. Inflation is inflation. However, it's not really so much to do with how they measure it. It's more to do with how they report it and the impact it has. So inflation has an impact on interest rates. So as inflation goes up, we have to put interest rates up to keep inflation under control. So what we're interested in is this figure, because interest rates increase the strength of a currency. So if inflation is going up, the central banks and governments have pressure to increase the interest rate. So the reason we look at the inflation figure is because it gives us forward guidance onto what's going to happen with interest rates, which gives us forward guidance onto the direction of the currency is going to go. So you have higher interest rates, that makes you more attractive to investment. So therefore, more money comes into the currency. That's the basic model. Obviously, there's a lot of more complex things going on under the hood, but that's the basics of it. So your 5-minute opening range breakout candle is going in there. And there's your 5-minute ORB. So if you're trading the 5-minute, we haven't gone anywhere so far from the initial open. Very lackluster open, which I'm not surprised about after the size of that drop. So if you look at the euro across the board, euro had a big spike. Look, well, actually, it's more of a whipsaw, to be honest. Apart from obviously against the pound. So we've had a bit of positive movement on the euro, and obviously that tanks the index. So right, so 5-minute opening range breakout, you just double topped. Not going anywhere at the moment. I am going short again in a sec. There we go, short again. Bit whippy this morning, this. Not really a lot of volume, is there? Keep an eye. Morning, Kennelly. Right, let's do some analysis on the FX side. So while we're waiting for the DAX to wake up, let's have a quick look at the DAX actually for directional bias today. Stopped out on that by the looks of things. Yeah, stopped out on the short. Right, so DAX today for targets, downside is in there and there and there. So plenty of downside targets. We've still got that gap in play from back here. So there's still an option for coming all the way back down into this area here. We've also got this area down here as well. So there's just loads and loads of downside targets on the DAX at the moment. Upside, we're looking yesterday's high basically, which is 159.16. That's your basic upside resistance. There's nothing above that. So we poked our head out yesterday above the parapet from yesterday's high and immediately rejected that, came back in and dropped. So that high got rejected yesterday. That low also got rejected the previous day. So we're stuck kind of inside bar at the moment on this candle, really. So we'll see where we go today. Have I just got triggered on long? Yeah, triggered into a long. This is going to be a whipsaw today. I've got a feeling this is going to be a big loss day today. There's no volume. Morning, Neo. Mandy, Aussie, New Zealand. We'll have a look at that. Yeah, this is a whipsaw today, so just be careful. You're probably going to make a loss today on the ORBs. ADRs, we've only got two. So the weekly Aussie New Zealand, the monthly was the Aussie New Zealand hit that we've already had. So Aussie New Zealand basically was a hit to the upside on the monthly. So month started back here. So this is your monthly low. That was your monthly range hit yesterday. I've got a feeling actually it was a hit the previous day, but we pushed up yesterday. Let's have a look what that was. Monthly is 273. That is 280. That's 260. Yeah, so yesterday was the monthly hit on the Aussie New Zealand. So you had your reversal alert there, and it retested nicely. So there's your M pattern, push down. So the structure shifted to the downside. We're pushing up this morning, just testing the previous day's high and potentially dropping from there. So nice looking little head and shoulders pattern formation going on. It's just going a little bit sideways today. So I've got 2 shorts on that already. Average is 107,899. Looking for drop back down into that propulsion gap there. You've got further targets all the way to the downside. There's loads of downside target on this. And this is the one that is a big potential pullback on a larger move. Turn those off on all time frames. So this move is basically what we're looking for. So a new test on the lows at some point. So that was your monthly extension. The other extensions we've got at the moment are on ADRs. So we've got euro pound. Obviously, these have all been triggered off of the back of the CPI figures. So what a nightmare. Never mind. It's not going to trigger my short now, is it? It's going to fly to the downside. This is the trouble with this pre-market 5. It's too tight. Outro, this is your fault. You're not in here, are you? Because you come in New York. So, yeah, big push to the downside at the moment. This isn't updating properly, this, for some reason. Got an updating problem. I've broken this new indicator I built. I've broken it. I've got to start again from scratch. I don't know what I've done, but I've properly broken it. It's not updating. So I'm going to need to go back. And I forgot to save revisions. So I am literally starting again. So this is coming out sometime in the next month. Yeah, we've got that propulsion gap, which is now filled. However, my indicator doesn't update. So you have to flick and then it will update. So whatever I've done to break it, I can't remember. And to be honest, I can't be bothered to go through 1,000 lines of code. It's probably a bit quicker to just start again. So that's hit. So looking for a push back up basically into these areas up here. We've also got these propulsion gaps to the downside to look at as well. So there's lots of opportunities in both directions on the euro pound. However, we've just obviously got the news that the pound interest rates are going up, which is bullish for the pound. However, we've got the PMI figures coming out on Friday for the euro and also for the pound. So there's potential that this, I think it's the pound on Friday, isn't it? Yeah. So it's the pound, the euro, and the US on Friday. It's PMI day, basically. So there's good potential for this to go in either direction on Friday. But at the moment, nice mean reversion opportunity. So this big, strong push down is likely to get traded back up into if it's going back down to there or if they're going to come back up to there and then go down to there. Either way, there's a mean reversion opportunity. So you can get in on an ADR reversal, but you're going to struggle, I think, to get a reversal alert on this because obviously the news has triggered a massive strong move. So the only way you're going to get into this on an ADR reversal today is by taking a price action pattern, which is basically this candle at the moment, which is nice and bullish, and trading it back up into there. You're not going to get a reversal alert on it, so you can't really trade that one. The pound yen is going to be very similar, I would imagine. Yeah, so the reversal alert's all the way down there. So you're not going to get any easy reversal alert on this one. It's an RSI, an ADR extension to the upside. Broken out that high. So yeah, mean revert back down into there. But you're not going to be able to do it off a reversal alert at the moment. However, if we break high here, that is going to become your reversal alert and you're going to get a really nice tight entry on that one. So potentially good looking short on the pound yen as well. But again, we're still waiting for that yen strength to come through. That hasn't manifested yet. George, pound yen, RSIs. We'll cover that in the RSIs. Pound yen. Let me just see what this pain in the backside's up to. Total whipsaw. Um, right. I'm going to miss the entry on this, so I might have to manually trade this. Actually, I'm going to get in on the 15-minute, aren't I, as well? So the 15-minute opening, 15-minute opening range is in. There's your 15. So I've got a short entry on the 15. I'm going to take a manual on it as well. Short. If it breaks that 15-minute, I just want to try and get some of this loss back, ideally. If it drops, obviously. Right, let's leave that in place. So yes, the yen pairs basically, pound yen. That's RSI extension. We just covered that one, haven't we? Yeah. So pound yen RSI extension. It's also extended on the hourly. ADR extension and RSI extension above 80. So that's a good looking short opportunity. The pound yen, pound CAD. So you probably are going to get a reverse alert on that now. Not quite. Just needs to break that high, and then we'll get a nice tight entry on that. That'll be a really nice entry. Pound CAD extended on the hourly as well. So that's coming up into this propulsion gap here. Target back down there at some point. Canadian dollar will be impacted tomorrow by the unemployment news on the US dollar. We've also got Macklem speaking again tomorrow afternoon. So the unemployment claims is the main thing that's going to move the Canadian dollar tomorrow. So nice looking potential entry on this one. Again, reversal at the moment is all the way down there. So we really need this pound just to push a little bit more today, just to give us that new high. Then we'll get that nice tight market structure break, which means we can target obviously back down there or wherever you want to. But yeah, it looks good. Both of these for shorts. Bear in mind, obviously, we've just had the CPI figures, so it may well push for a couple of days. The pound would have to wait and see what the market makes of it. Pound Swiss extended on the hourly as well. So there's another RSI extension above the hourly. I've got longs on this at the moment, so I could really do with this pushing up massively, but not sure it's actually going to get that high. Reversal is all the way down there. So again, for a short entry on this one, you're going to struggle at the moment. It's just that moves was too strong. So propulsion gap completed there. You got another propulsion gap there, which it's going to come up and target. We've got this unfinished business up here and up here. We've got this little bit left down there as well. So potentially, if we can keep this weak Swiss franc, we could get all the way up there. But we'll just have to wait and see what happens with it. But nice mean reversion opportunity there. Obviously, this is your ultimate low. This is the unfinished propulsion gap to the downside. So it can really go either way. The market's got so much it can do with this one. It all depends what the market makes of this new inflation figure. We were kind of expecting an increase of interest rates on the pound anyway. So I'm not convinced that necessarily the market's going to be surprised by the inflation figure and the fact that we need to put our interest rates up. It's kind of a given. So I'm not really convinced that it should be reacting quite this strongly to that figure. But Swiss franc weakness is really what we need, because we've had a very strong Swiss franc over the last few weeks, as you can see. And that is starting to abate now. So it's whether or not the pound has got enough strength to get back up here or it's just going to get driven back down for a couple of weeks. But we'll see on that one. But nice mean reversion opportunity, nicely extended. That profit take will come in on this move at some point. If it doesn't do that now, it will do it when we get up to there in all likelihood. US dollar yen, we've got an hourly extension on that one as well, just about extended, not quite far enough for me yet. We're double topping at the moment on yesterday's high. Really big, strong potential downward movement on this US dollar. So we're going to be waiting for the unemployment figures to come out on this before we get any movement on it, I suspect. I don't think we'll get much movement today. If we do get movement today, I would expect it to be bullish. And then those unemployment figures are really going to make this pop or drop. So we'll have to wait and see what happens with unemployment. But these propulsion gaps to the upside need to be filled, then those ones down there. So that's either a drop or a pop. I'm short already, so I'm already committed short. So I'll be scaling in short when we get back up into this area, regardless of whether we do it today or off of unemployment. Obviously, if unemployment figures come out as higher than expected, we'll get that nice drop on the US dollar, and that will get me out of these. So hopefully that's what happens tomorrow. Euro yen, same sort of thing. And of course, the other thing we've got with these ones as well is with the US dollar yen, any kind of yen strength. We've had no yen strength for the last couple of weeks. So any kind of yen strength, as soon as that triggers, we are going to see a massive drop. So the yen is notorious for that climbing up the stairs, falling down the elevator shaft type move. So just waiting, really. And we do this a lot. We sit and wait on the yen, and we wait for that. Any kind of intervention or any kind of strength in the yen, mass buying, any kind of run on fear, all goes into the yen, and the yen, everything drops against the yen. So, but you end up with the thing grinding the rest of the time. So this is where we are at the moment. So I've got two shorts on this, waiting for a drop, nicely extended on the RSI. Yeah, just waiting again on euro yen. All these yen pairs are the same. And euro yen is also extended on the 4 hour. Yeah, so nice 4 hour extension. That's embedded. Yeah, so occasionally we get that embedded. So basically just a squeeze. And all we've done is accumulate and push. So that profit take move at some point will come into play back down into this high here and propulsion. So again, short target down to there, drop down onto the lower time frames, M15 or M5, wait for those reverse alerts to come in. And hopefully that'll be a nice profitable move as and when. See, that's not updated again, is it? Why are you not updating, you stupid indicator? I've broken something. It's really annoying when you break something. I haven't kept a very good development process during the development of this indicator because I've basically just been bodging it all together. So I don't think I've got any good backups. And I don't even know when it stopped reacting. The first thing I noticed was that wasn't updating. And I was like, why is that not updating? That's updating, but that's not. Something's wrong. So that was some point yesterday. And I can't remember when I last backed it up. Anyway, that's my problem, not yours. So there you go. There's your RSIs and your ADRs all covered. Someone's just asked for it. Here it comes. It's the week. Oh, got a little fly in here. Sorry. Gold. So we're waiting for the euro on this. For the unemployment figures on gold. So at the moment, we've got tons and tons of downside movement because we've obviously had this weakness in the US dollar. We have made a new high and we have double bottomed. So at the minute, the market structure on this is obviously bullish. So starting down here, I think you start all the way down there if you want to, but basically high, low, put in a lower high and a higher low, symmetrical triangle. Yeah. Then we put in a lower high and a higher low. And then we finally broke that high, pushed up. The market structure at the moment is potentially still bullish. However, there's a lot of unfinished business to the downside to sort out on gold. So any kind of strength in the US dollar off the back of the unemployment figures, i.e. unemployment figures come down, strength for the US dollar, unemployment figures go up, weakness for the US dollar. We'll find out tomorrow. But basically, this is all going to hinge on unemployment tomorrow. So which way it's going to go today, couldn't tell you. Up or down, one or the other. We're coming out of this propulsion gap, which seems to be holding. So they've tested it twice now. And it's come off of this double bottom. So basically, there's your high, there's your low. Whichever one of those breaks first is going to be the direction for the day, or possibly the rest of the week. But if you break to the upside, you're buying straight into ADR. So I wouldn't look to go more than 150 ADR today on that, if it ever manages to do that. And if you break to this downside, you're selling straight into ADR. So wouldn't want to go more than 125 ADR. So those are your targets, basically. It's either going to go there or it's going to go there. I don't know. One of those is going to happen. Pick one. The decision is yours. Morning, Andres. Swiss yen. So the yen pairs basically are massively weak. The Swiss yen is the kind of perfect storm at the moment, because obviously the Swiss franc has been massively strong. And at the same point, we've had a very, very, very weak yen. So this one has actually managed to push a lot stronger than the rest of them. At the moment, we are looking at the previous day's high at the minute for resistance, which we've kind of just tried to tap into there. And a load of limit orders triggered. So this is your first sign that potentially this is the exhaustion point for the move. When the market moves up and it hits a level and immediately gets rejected from it, that is normally the bank's triggering limit orders, which are sitting at this level. So basically, the market pushes up to retest that level to see if we can push through it and do some price discovery above it. And there's just too many limit orders sitting in the way, and it just gets pushed straight back down again. So this is why you tend to find you see hammers and shooting stars at the ends of moves, because that is basically limit orders triggering to drive that last candlestick all the way back down or all the way back up. So that's what we've got triggering there at the moment. So a break of that low, you would probably find move back down into there. Market structure, obviously, you can take a break of there. That will get you in short. So looks good. So it's when you first put it on the chart. So when you flick to the time, so I'm just thinking logical here. When you flick to the time frame, it through time frames. I think I might just stick an auto refresh script in there, and then I haven't got to worry about it. That's the really lazy way of coding. Morning, Mimpo. Oh, you said morning to Stevie. Oh, fine. Don't talk to me then. I don't care. Morning, Baggy. Gold seems an interesting spot. Spot gold. Good joke, Andrew. Yeah, I've done gold. Oil we need to look at as well. So oil, we've got... Why is it doing that? It's going to bug me, that is. I'm going to fix that this morning. It's my mission. So oil, we are stuck at the minute deciding whether or not we're going to do the gap fill. So we've got this gap here. That is what we are aiming for. So at the minute, what we did was obviously gap up on the OPEC news, put in a low, put in a high, sat around there for 7 days, broke the high, started a pullback. That's where I said potentially there was going to be a buy, which kind of started and then it failed. We pulled back in. Price discovery has failed. We couldn't make a new high, and now we are looking like we want to test these lows again. So there's a good chance that we are going to come back down and test this low and this low, which is last week's low and the previous week's low. Yeah. If we break these two levels, i.e. we get beyond 125 ADR today, that is what we're going to do, I think, do the gap fill. If we can't manage to get there, there is a chance for a break to the highs. But at the moment, as you can see, for the last 2 weeks, they haven't really got a clue where they want to move it. They're happy with it where it is. So very difficult at the moment. I really like a long and a short. I can't make my mind up, so I'm not basically trading at the minute. But any break below ADR today, I would say you're probably good for a short, and any break above, above the weekly high from last week, obviously. But if you want to start getting into a position, if you've got a long bias, break of today's high to start the position off, or break of today's low to start off the short position. If you look at it on the daily, literally, since we gapped up, all we've done is be indecisive a lot of the time. So we had that little bull run and they were like, no, we're not happy up there. We're back down here again. So yesterday was a complete indecision. Very difficult, isn't it, to tell which way this is going to go. So one or the other, $95 a barrel or back down to $76 a barrel. Those are your targets. One or the other. Pick a direction. Very hard to tell at the moment. Channel we drew on something else. No. Anna, can ask you, how can I understand better where LQ is? I don't know what LQ is. Don't know what that is. Whipping post. You have to explain what LQ is. Do you mean liquidity? Is that what you mean by LQ? You're going to need some fundamental news to bring oil back down. I don't know. I mean, fundamental news will obviously do it, but the only fundamental news that's going to bring this back down is going to be something to do with oil. So obviously the oil is priced in dollars. So if the dollar drops, typically you'll see the oil price try to rally because it will want to fight against the dollar because they want to get as much as they possibly can for their product. So, but if OPEC come out and say, actually, these restrictions on production aren't going to help, we're going to need more oil, then that will bring the price down. If they don't do anything about this and we break that high, the market's going to see that as a sign that oil is rising. We've forecast for 107, 95 to 107, which you've got to go out into the higher timeframes to spot. But 107 is all the way up here. Yeah, and 95 is all the way up here. So, as I said, when we were down here somewhere in March last month, because we were expecting to rally from here. We were expecting that to be the low because we made the high, low, high, low. Then we made a lower high and a higher low, and we were like, right, this is going to be it. That was where it failed. We were expecting that to rally up to 95. It dropped. So when we were down here, I was like, well, if they're going to get to 95, they better get a wriggle on because we're in March. So if they want to get up to here or here by the end of the year, they're going to have to move it, aren't they? So we then started to rally, and that was exactly the spot I said, right, next pullback, I'm long. And it just gapped without me. So these gaps, you don't see gaps. If you look back through oil, it doesn't gap. Whenever it has gapped in the past, it's filled the gap. There's one there, filled. You probably can't see that because it's absolutely tiny. But when you do get gaps, that's probably going to go off the chart. They fill. Yeah. It's very rare to leave unfinished business in oil because it just doesn't happen. It's an investment vehicle. It's a futures contract. So there's a load of people with futures contracts in oil now, massively, massively offside on their positions. The market doesn't like that. The market needs to be efficient. So when you get these gaps, especially in something like commodity, which is traded on the futures exchanges, you need that sorted. So I'm always like, right, well, if you see a gap in a commodity or a gap in an index, it's very rare that it will ever get left behind. We haven't seen a gap that size ever in oil, not that I can look back on in modern times. So you've got to say that there's a very, very high probability of that filling. But it's to do with the fundamentals. And it could be a case of, yeah, they're going to get caught offside. It's coming down really hard this morning, look. just been doing nothing but driving down this morning, has it? So I don't know. It's a tricky one. But if OPEC say something, definitely. If not, I think this could just fly and leave that in place. I just don't know. This is the thing. It's, it's one of those things. We haven't had this before. How can you possibly forecast what's going to happen? Because it hasn't happened before. It's like the pandemic. We've got a pandemic. What are we going to do about it? No idea. Let's sit down. Oh, I know. Let's lock the entire world down for 3 months or 6 months and crash the economy. It's just not done it. So, but gaps fill. And for me, up here, when we broke out this high, I said, if we break this low, that's the short of the century at the moment, because your stop on it is somewhere like there and your reward is all the way down there. It's such an easy trade and it's done the short. However, it's just not managed to get there. I was expecting when we broke to fly and we haven't. So we'll see. I'm not going to trade it though, because it'd be a good one to take on prop, I think. My God, look at this. What a mess. Proper Mr. Wick this morning. Look at the state of it. Wick, 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 wick. This is massively bearish, but massively stopping me out over and over and over again at the minute. Kind of just want to pile in really, 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 really short on that, hoping that it just flies, but we'll see. Just pop down and double bottom would be lovely. See where we go. That's eating that account up, isn't it? $287 loss. That was $230 up this morning. Never mind. Any money. Right. Morning, Ike. So liquidity. So how better to find liquidity? How better to understand liquidity? I don't really know how you can understand it. It's just what it is. So all liquidity is levels in the market. That's literally it. So these blue areas are liquidity. And underneath every high and low is liquidity. Yeah. All liquidity is orders in the market. Yeah. So we know at this point, when the price drove down, there was a lot of liquidity in the market because price drove down very hard, which means there was an awful lot of orders entered into the market. All liquidity is a load of orders. That's what we call it, liquidity. It's a liquid market. There's lots of it moving around all the time. Volatile. Yes, that's what you mean. I don't know. We know that at highs and lows, there is liquidity because when somebody hits the short button, what do? Put a stop there. What is a stop order? Liquidity. That's what the market hunts. Liquidity. So every time, and this is why the market structure exists. Yeah, it does that because every time it pushes down, it pushes away and it entices liquidity into the market so that it can take that liquidity. Everybody then goes short, puts their liquidity up there, so it moves back up. And then as soon as it's moved up, everyone puts their liquidity at the low, so they come and take that. That's why it does what it does, why it's random. And it's random because it hunts liquidity. It doesn't know what liquidity it needs until it runs out of orders. And if it runs out of orders, it needs to go and find some orders to complete. You don't need to understand necessarily. What you just need to know is price moves from support and resistance to support and resistance, hunting liquidity. Therefore, if you draw horizontal lines along your chart where there are previous areas prices turned, you know there is liquidity there. If you draw blocks on your chart, every time there is a strong propulsion candle placed on a time frame, it means there was a large move by the banks, which means there is liquidity. And if that liquidity after that move hasn't been traded back into and retested, that leaves a gap. And the gaps are what the market uses to fuel its movements. So you don't really need to understand it. What you need to know is it is a thing that happens and it will go from A to B, which is why I come in here and say it's either going to go there or it's going to go there. If I knew which one, I'd be a billionaire. I'm not. I don't know which way it's going to go. I know it's going to go there at some point, and I know it's going to go there at some point. I just don't know whether the direction is going to be that, then that, or that, then that. I don't need to know that, though, do I? If I scale into a position like that, I'll get out when it does that. If I scale into a position like that, I'll get out when it does that. That's position trading. It could go all the way down to there and all the way up to there, in which case, if I get in short here, hopefully I'll get out on that. And if I don't, I'll need to wait until we get up to there before I get out. I don't know how many positions I'm going to need to get out of my position, how many trades I'm going to need to get out of my position, but I know where it's going. I just don't know when it's going to get there or which way it's going to go first. However, when you've got something like gold, pretty obvious, it ain't going up. I don't know when it's coming down, but it is. That's liquidity. These are liquidity pools, if you like, areas where this is why you see the market. This is, I mean, gold's a brilliant example. This is why this line here is higher than this line here. This line is higher than this line, and this line is higher than this line because the market has been going and hunting liquidity. There was liquidity here. It took it out. It pushed up. It pulled back. Liquidity was placed there. It pushed up. It pulled back. Liquidity was placed there. It pushed up. It pulled back. Liquidity is now placed there. At some point, one of these liquidity pools will be the last one, which is what we call the peak formation high or the peak formation low. We don't know which one it's going to be, which is what the reversal alert tells you. The whole point of this indicator is we might have found the last liquidity pool go short. Have we? Nope, it's gone higher again. Okay, there's your next reversal alert. This might be the last one. Have we? Don't know. Yeah. Again, I keep saying the same thing. No one can tell you where the market's going and no one can tell you when it's going to turn. We know what happens. Therefore, if you have an indicator that tells you when something is likely to happen now and you can see a level has been breached, that's a good opportunity to get into a short. The odds of it going up or down right there are 50%. I don't know. But if there's more targets to the downside, I would say the odds probably go to something like that. I don't know, obviously, but is that what you mean by liquidity, understanding liquidity? That's why I view liquidity. The other way you can look at liquidity is as a measurement of volatility. So like I said, pound New Zealand can trade anything from 350 to 400 ADR in pips. At the moment, it's trading 174 because the market is illiquid at the moment, i.e. the volatility is low because the liquidity in the market is low. There's less participants doing less speculative trading, which means the ranges reduce, which is what, again, you could call it an illiquid market. I call it a less volatile market. Volatility is the movement intraday up and down, or the movement on a time frame up and down. If something is very, very range bound, it's not very volatile. If something is massively range bound and moving around, that's highly volatile. That's not the same as a liquid market. Liquid market has a lot of price movement up and down constantly. That makes sense? Is that what you wanted to understand? I think that's what you meant. Thought to be boring, but having a disagreement with the missus about inflation. Can you explain again how that inflation, interest rates, currency strength cycle works? So, I'm not an economist, right? So, there's a lot of cogs in the economy, right? And these are the four biggest cogs. So, inflation means stuff goes up in price. Yeah. If it keeps going up in price, what happens is we can't afford to pay the bills and the country goes bankrupt because we go, well, sorry, I haven't been paid enough to pay the electricity this month and I can't buy any food this month. So I'm either going to starve to death or freeze to death. The country can't obviously have that. So what they do is they put interest rates up. And interest rates are a a kind of mechanism for controlling borrowing and spending. It's the big cog at the top, which drives a load of tiny little cogs below. But all you really need to be aware of is when inflation is going up, we need to slow it down. We want inflation for a stable economy. You want inflation to be running and sustaining itself at around about 2%. We want to be growing, and inflation drives up GDP, the gross domestic product of a country. So we do want positive inflation. We don't want deflation, because that helps our GDP. It helps us to grow. It helps everybody to make money. It helps everybody to be happy and live lives that they can sustain. The interest rates are driven up when inflation gets too high, and the result of increasing inflation is less investment. Is very complicated. I'm not going to go into the details of it because it is too complicated. You can read up about all of this, but what you need to know is when inflation goes up, interest rates go up. When inflation goes down, interest rates go down. Interest rates make a currency more attractive to investment. So if interest rates are the overnight bank rate, right? So if you put $1 million or £1 million into your bank right now, you will earn an overnight interest rate. That's it. So if you've got $1 million, and if you're, let's say you're a billionaire, let's say you're Warren Buffett, right? And you need to invest that money into businesses. The businesses you want to invest in are the ones which are going to grow the best. And you also need to earn good overnight interest on your money. And the ones with the biggest interest rates, example at the moment is the New Zealand dollar and the US dollar, are where you're going to get the most return. So what that does is it encourages money into that country, making that country or currency stronger. Yeah, which is why we don't see a lot of investment in Japan, because they're not running negative interest rates. If you put $1 million in a bank in Japan at the moment, you'd end up gradually losing money. No good, is it? So you put it where you can make more money. So interest rates make currencies attractive to investment, which strengthens the currency. Inflation going up causes the banks to increase interest rates, which makes a currency strong. Inflation going down is good for you and me as the spender because it costs us less to survive, and it takes the impact off of interest rates, which again is good for us because it makes our mortgages cheaper. So it's all good when it's going down. GDP going up is good for us because it means that our businesses are doing well, which means they can afford to pay us more, which keeps our unemployment figures low. If unemployment figures are going up, it's bad because it has a negative impact on absolutely everything, the economy, the state, the whole lot. So interest rates as they go up means that more people tend to save rather than spend, which is bad for business, which is bad for employment. Employment rates going up has a negative impact on interest rates. It's all interlinked in a very, very, very complex cycle. But the thing that you need to really focus on is when that is higher than another currency, that tends to have a positive bias. So if at the moment the US dollar is 5 and the Swiss franc is 1.5, what we call the differential is 3.5. The differential is positive US dollar, negative Swiss. Therefore, we should be long US dollar Swiss. However, all of this goes into the pot, which is why the bias scorecard exists. Yeah, because it's not just interest rates that make something strong. The GDP of the country that has that currency comes into effect. Unemployment will impact this, and the future movement of this is what drives us up or down, which is when I keep saying it looks like we're hitting the terminal rate on the US dollar. There's only one way it can go down. Interest rates go down, currency strength drops. Yeah. Does that make sense? It's a really complicated thing, which is why I built the bias scorecard, because you don't have to understand it. You just look at this and go, oh, buy the Swiss yen. It just makes everything easy, doesn't it? Euro New Zealand is a buy at the moment for a number of reasons. The COT is the important one. If you look at the COT data, yeah, all of that stuff I just said to you, right? There are people that are paid £60,000 to £100,000 a year to sit in banks, institutions, funds all over the world, basically, they know this stuff inside out. They analyze this and they pass all of this analysis and their own scorecarding systems onto their traders and tell their traders what they should be doing. The traders, when they enter their positions, have to report them to the CFTC. The CFTC then reports those figures to the world. So this data here, shows you the positioning of the institutions who have the guys who have got the economics degrees that are being paid 100 grand. This tells you the direction they've been told to trade in. So if they've been told that the US dollar should be long, we long it. If they've been told that the yen should be shorted, we short it. So if we've got a 67% long on the US dollar and an 85% short on the yen, what do you think we should be doing? Buying US dollar yen. So this data here, this is why so many people use and look at this data, because it gives you the big high level picture of, at the moment, the entire world in the futures trading market is short on the Australian dollar, which means they have little faith in the Australian dollar. So if you look at the Australian dollar, yeah, it's coming down. Not against the yen because the yen is weaker. Yeah, but overall, high level view. High level view of what the current situation is, what the interest rates are, inflation is. That all goes into a pot to give you a rough idea of roughly where price is going to go. That's what fundamentals are. But if you want to know how to do it properly, you need an economics degree, which is why I built this, because it means I don't need one. In effect. But there's when you look at inflation, it's a very hard thing to get your head around from a human perspective. I want inflation down. Inflation coming down for me is good because it puts more money in my pocket that I can spend, because my electricity bill comes down, my food bill comes down, everything comes down. So I want inflation to drop. My mortgage comes down. If inflation drops, the interest rate drops. If the interest rate drops, my mortgage drops. I become richer as inflation drops. However, your currency, your country, your central bank doesn't want that necessarily. Well, they do, because they want to make everybody happy and win elections. But it makes a currency stronger against another one, which attracts investment, which increases your GDP, increases investment in business. And this is the whole rich get richer thing that everybody in the world hates. Yeah, there's X percent, tiny little 5%, 3% that own 95% of the wealth in the world because of this. And the way this all works, and trying to make it equal is impossible. So we all want inflation to come down, but if you're a currency trader and you want to be long on something, you want inflation to go up because it drives interest rates up. There you go. I'm 3 short on the DAX. And it ain't going anywhere. We're in a really nasty, we are in a downtrend. Market structure is short, but we're not really moving anywhere. I've got a lot of exposure on here. I've got 1.5% short. Just attempted another short, which failed. Tough one this morning. There you go. So there's liquidity explained, and there is basic economics. But a lot of people disagree as well with things. Yeah. So what I just said there, you ask somebody else and they will be thinking, they're looking at it in a slightly different way, because there's like 50 odd cogs in the wheel in economics. And this is why the market moves up and down, is because you'll have 25 central banks and analysts giving you that opinion based on the economics and all the fundamentals. And you'll have 25 of them giving you that opinion. The reason the market goes up and down is because some of them are doing that and some of them are doing that. And this is why you have, look at the news yesterday. Bostic, my baseline to keep interest is to keep interest rates unchanged after the next hike. So one member of the Fed has said, we're going to keep it flat. Scroll down, if you can let me, to Bullard. I see policy rates at 5 to 5.75. So even in the Fed, there's one guy saying that and there's one guy saying that. They're both in the same board, doing the same thing for the same currency and they disagree. Yeah. So there is no magic. This number means this is going to happen. They can't even agree themselves on whether it's a good or a bad economic situation and interest rates should go up or down. So what chance does anybody else stand? Yeah. Which is, again, why I keep saying this is a random market, a random event. You have an interest rate goes up, which is bullish for a currency, and that currency drops by 200% ADR. Why? Don't know. Because the banks were positioned incorrectly on it, and that's not what they were expecting. Yeah, it doesn't matter, does it, what the news is? What happens is the news moves the market. So either you are positioned correctly and your P&L goes up, or you're positioned incorrectly and your P&L goes down. You deal with your P&L, your open drawdown. You can't forecast the direction. The best thing to be is hedged, because at least then you're going to get a couple of positions which are going to work. DAX is killing me. I'm going to blow this account, I think. I'm going to loss. Giving up on this one today. So potentially going long. This is just an absolute chop fest. I'm going to leave it for a minute. Watch it. Any news on the support resistance indicator? No, not at the moment. It's broken. I need to fix it. If I understood you correctly, the highest price and the lowest price is liquidity. Sort of, yeah, but no. That isn't the lowest price, is it? But that is a pool of liquidity. That isn't the lowest price. That is a pool of liquidity. That is the lowest price from last week or 2 weeks ago. That is liquidity. That is liquidity. But that's not the highest price. That's the highest price. That's liquidity. That is the lowest price of the last couple of days. That's liquidity as well. Liquidity is an area where there is a concentration of orders. I wouldn't worry yourself to use support resistance, use wide range bars, propulsion gaps. They show you where it is. That's really all you need to know. It's not going to be right either. Going along on the DAX. Yeah, DAX. And these aren't set in stone either. Yeah. So some of these will get orphaned. So they never actually realize as liquidity. They're never realized as liquidity. They will get orphaned. So you'll have the odd one every now and again, which won't get filled. All the way up there. Yeah, so this is from January, the 30th of January. Never came back. That one we tested twice. That one we never came back to from February. May never come back there. It will at some point in the future, obviously. At some point in the future, it will come back there. But, so you can't rely on anything in this. This is what I keep saying. You can't rely on anything in the market. That's the one thing I've learned in 15 years. Nothing works. Nothing there is no system or strategy that works all the time. There's no system or strategy that is going to be consistently profitable if you put an order in the market to become the liquidity pool. If you remove yourself from the liquidity pool, you can't be taken out because you don't know which liquidity pool is the one that they're going to go for. So, every system of strategy you ever see is focused around timing an entry in a direction on a random thing. Yeah. If someone put a gun to your head and said, you've got to go long or short, this is the last trade you're ever going to take, you might as well flip a coin because the odds are exactly the same as when you hit the buy or sell button with the best technical analysis you could ever do with a system that has a 90% strike rate. You're still going to lose. There's a 50-50 shot when you hit the button whether or not it's going to be the 90 or the 10. The odds of hitting the button, regardless on what the past results are, the odds when you hit the button are 50-50. There's liquidity pools to the downside and the upside on this. I haven't got a clue which way it's going to go. I can give you an idea because I can look at all sorts of things like this. I can say it's more likely to go short than it is to go long. But, you know, it doesn't mean it is it? This is why we position trade, because we don't know. We don't know which way it's going, because I can't tell the future. Neither can you. Neither can anybody. Neither can all the guys selling training courses for $2,000. The reason they're selling training courses for $2,000 is because they can't predict the market. They couldn't crack it. That explains it, Steve. Good. Hopefully. Sort of. I'm not, like I say, I'm not an economist. There's courses on this stuff. Actually, I've got a course on this stuff. I've got a good course on this. I'll have to find it. I might recap it, actually, and do a video on it. It is a very top-down view, though, because that's me. I'm top-down. I'm not that detailed, as you know. Ben, what's happening with pound yen? It should be going down, up rather, because the pound CPI, basically. So there's a good entry on that short now. You should get the reverse alert. Yeah, so the reverse alert's nice and tight now on these ADRs, yeah? So we looked at these ADRs this morning. DAX. It's going to kill me today. I know it. So ADRs, obviously you got the euro pound. 5-minute reversal is still miles away on that one, but these ADR RSIs rather that are all lit up now on the pounds. Most of these pound RSIs you can probably get in short now. So reverse alert is really tight now. Look there. Pound CAD, nice and tight. Pound Swiss, that's still miles away. Pound yen, that's nice and tight now. Pound New Zealand, that's just reversed. You just had the reverse alert on that one. It's just retesting. And pound US dollar, you just had the reverse alert on that one as well. Again, down into there. Simon, with RSI over 83, pound yen, pound got positive news while yen got negative news. Can the market go much higher now? Yen got negative news. What's been negative on the yen? I did scan through. I didn't see any negative. I didn't see anything. UK interest rate swaps fully priced in the Bank of England, reaching 5% by November. That's a long way away. That's only 0.75. I reckon we'll be there by July, to be honest. Interest rate, inflation's going up. They're not going to wait until November to get to 5%. We will be at 5% by November, way before November. Yeah, but it can go anywhere it likes. And this is kind of what I've just been saying, Simon. I'm going to call you Simon because I can't pronounce your first name properly. Can it go higher? Yes. It can go up to here today if it wants to. You've no idea where it's going to go. All you can do is look at what's historically happened. And historically, when we get here, around about 23% of the time we go further. When we get to there, around about 12% of the time we go further. When we get to there, around about 6% of the time we go further. Can it go further? Of course it can. Will it go further? Don't know. Even if it does go further, if you look at the RSI extension and look back in history, when we get to these sorts of levels, what happens? Bang. 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 What's going to happen? At some point, it's coming down. I'm already short. Free. I will be taking another one shortly, and my average will come back up to here. And when it goes bang, I will get out. I can't tell you how far it's going to go today, and I can't tell you when it's going to turn around. No one can. But yeah, it can do. So the CPI figure is going to drive up interest rates. That is not something that we were unaware of. Yeah, we knew interest rates were going up on the pound. What possibly now the market is factoring in is that interest rates will go up more than it was planning to. We didn't know what they were planning. We were anticipating at least 0.25%. I would probably factor in now they might go 0.5% on the next interest rate rise. So the market is probably now positioning itself a little bit longer because it's anticipating an interest rate increase up to 0.5% rather than 0.25%. The Bank of Japan, if this continues, looking at all the other yen pairs, so all the other yen pairs are having a little bit of a weak day as well. So if that continues, the Bank of Japan will intervene and they will drive the yen up, which will drive all pairs down. So regardless of whether something is massively strong or not, if the Bank of Japan intervenes, the yen will flatten everything. So it's a nice thing about trading the yen short. You've got that thing in the back of your mind that is always like, if this gets out of hand, the Bank of Japan are going to help me out. You just have to get on the phone and ask them nicely. Sometimes they don't answer, and I don't speak Japanese. Bella, I've bought the EA. Does it mean it is broken as well? What? Don't understand. Hi, I've bought the EA. Does it mean it is broken as well? I don't understand what you mean. Sorry. The EA is not broken. Oh, are you referring to this indicator that I'm building? Yeah, this has got nothing to do with the EA. Nothing to do with the EA at all. Any EA. This is an indicator I'm building. Is that what you mean? I don't know. Nothing's broken that you've got. Don't worry. Tony, morning. What whacking bear candle might need to be balanced before it goes short on the DAX? Oh, that whacking bear candle might need to be balanced. Yeah, so that's what I'm playing now. I'm playing long up into this propulsion. Again, going long again. So I need to get some money back. Yeah, so that's basically I've flipped long. Where is that? 158.83. Yeah, see, that's going to be totally different. We just had some something's just spooked that. Pound yen has just hit 125 ADR. There you go. So weakness in the yen today, more yen strength, weakness rather. So everything's pushing up against the yen. I have pre-market data, so hard for me to see. Yeah, so you can't see, Tony. So this is pre-market data. It's rubbish. So this is all like nonsense. Just broker data. God, this thing's just not tradable today. I'm going to stop trading the DAX this morning. It's just killing me. So you can't make money when the market's doing this. So I've got to stop. Otherwise, I'm just going to blow that account. Right. Hope pound yen does like the 4th of April. What happened on the 4th of April? Yeah, there you go. So that was a profit take move on that. We're waiting for the profit take move to happen, basically. So don't don't forget, when the banks have bought hard like this, they have to get out of those positions. Yeah, and this is basically squeezing all the shorts. So they're short squeezing at the moment, which means that everybody like myself is getting squeezed into drawdown. At some point, those people will bail on their positions. There'll be stop losses placed at strategic points. They'll bail on those positions. They will then run out of people that they can buy from. So there'll be nobody left up here to sell. There'll be no more stop orders to fulfill their buy orders. And the market will just kind of stall and drop. Yeah. So it gets to a point where it just goes, nope. And you can see it in the price action very clearly what's happening underneath the hood. Look. Here. So we rally hard. So the relative strength is very, very strong on the buy side. We push up. We get to that point where we get a wick, which is basically we can't go anymore. There are no more orders left. So we start to pull back. At that point, you get one of two things happening. You either get another wick like we got there and a doji kind of indecision candle, or you get a bearish engulfing where the move dramatically reverses, or you get that push up, pause, and then the next candle is a pullback, which is what I call a 3-bar reversal. That is a 3-bar reversal. Push, pause, pull. Yeah. So where we are right now, yeah, we're still pushing. So we're waiting for that rejection wick. And that can be, you know, so where this candle is now, this opened here. So this could be a candle that looks like that. And then it will either come slamming down. So that's a 3-bar reversal, push, pause, pull. And then it will come crashing down. Basically, they're just running out of orders. You can only buy, and this is why ADR exists. You can only buy for an amount of time that the market allows you to buy. Yeah. If I was a central bank and I could continuously buy and price would drive up and buy and price would drive up and buy and price, I'd never stop, because every time I hit the buy button, I'm making an absolute fortune. At some point, you hit the buy button and then you go, right, I want to buy some more. And someone goes, well, I'm not willing to sell to you until we get all the way up there. And you go, well, I'm not going to buy up there. I want to buy here. And they go, all right, well, we'll buy. You can buy it from us here. And they go, no, I want to buy here. And they keep dropping the price to the sellers until they go, all right, we'll buy it here. That gives you a wick, which means that then they go, right, we want to buy some more. And they go, no, we're not interested in selling you anymore. Bang. And as soon as that move starts, everybody that was buying sees their P&L, instead of increasing, start to drop. And as soon as you see your profit start to drop, you go, right, okay, boys, let's get out. We've made a load of profit. To get out, you become a seller. So what happens is it increases the selling pressure. The relative strength of the pair drops. And then everybody sees the relative strength of the pair dropping, and they become sellers. As more people see sellers coming in, they add to the sells because the market's going short, so they jump on board. That's why you get the market climbing up the stairs and falling down the elevator shaft. Making profit, making profit, making profit, making profit, losing my profit. Quick, better get out. Everybody else sees their profit dropping. Get out. And it becomes a selling frenzy. And it happens in the opposite direction. Just market mechanics. ADR hit on oil. There we go. So that oil move that I said about this morning. Anybody? There you go. We're off. So this is the gap fill. Oh, is it too late? Oh my God. DAX. Wow. DAX is killing me today. Right, I'm just going to switch accounts. Actually, no, screw it. I'm going to take oil on here. Oh, I can't trade oil on here, can I? No. Okay, so I'm going to start a short position on oil. So I'm just going to put a sell stop there and drag that down on a breaker there. Whoops. Okay, so that's 1.5% short on oil. I'll monitor that and I will remove those positions, but obviously I'm not going to target there. I'm targeting there. Seeing as the DAX kicked my ass this morning, better get some money back. Does it mean that the trading very close to gambling in some cases? Well, yeah, gambling, trading. At the end of the day, you are betting on an outcome. But I mean, obviously, the industry doesn't like to call it gambling. But at the end of the day, you are gambling. You are speculating on future movement of something, whether it be a boxing match, a greyhound race, a horse race, a football match, a tennis match, a game of snooker, or oil dropping and filling that gap or not filling in that gap. I'm betting an amount of money that the outcome will be preferable to me. Call it what you like. The markets obviously call it speculating and investing. If you've got $1 million, it's the same as anything. It's like this to me is a business. I run this as a business. I have costs, I have profits. Yeah, my costs of doing business are the trades that go into drawdown and I have to close out at a loss. The profits are the trades that go in my direction and I close out in a profit. The people that are doing these now, like we looked at yesterday in the live room yesterday afternoon, these 20 pip challenges and stuff where they're compounding accounts from $50 up to $5,000 and stuff like that. That's pure gambling. Martingale is pure gambling. Grid trading is pure gambling. What I do is enter a position in the market and I scale out of those positions with risk. So I am more of a speculator than a gambler, in my opinion. But all of it is gambling, isn't it? As soon as you put any money into an account, there is a high probability of you losing it. It says so on every website. Look. It says at the top there, look. They're very open and honest, brokers. 75% of retail investors lose money when they're trading with this provider. So if you go and put 5K, well, let's make it easy. You go and put $1,000 right now into this account with IG. Yeah, they are saying on page 1, when you sign up, you will end up with $250. Yeah. Do you think it's a gamble? Having somebody tell you factually that there is a 75% chance you will lose the money you put in. Do you think that's a gamble? If you do, you're gambling. It's a fine line, isn't it? What I class as gambling is over leveraging, right? So if you go compounding, these silly compounding challenges that people are trying to do, and some people are going to fail it. Yeah, in the same way as I can walk into a casino right now and go red, black, red, black, red, black, and it comes up and I walk away with $1 million. I can do compounding and go 20 pips, 20 pips, 20 pips, 20, 20, 20. I can get it right. A 50% strike rate strategy is going to get it right 5 times in a row quite often because it's got a 50% strike rate. If you can compound yourself and take 5 trades and make your account 5 times larger, 500% return or whatever it may be, of course you can. Is it trading? No, it's not. It's gambling. It's a question I get asked a lot, and it's a question that will never be an answer to because everybody's going to disagree on it. From where am I short on GJ? I don't know. What do you think? Is it gambling? I'm short from 29th of March. My first entry. And since then, the yen has basically for the whole month, the yen has just been weak. So, but this is what I'm saying. I am basically in a position without a stop loss, right? And I get it all the time. Oh, the no stop loss gang. He's trading without stop loss. He's going to blow his account, right? So I've been in a trade since the 29th of March on this. Yeah. And it's now up there. It's moved a total of 480 pips, which is roughly 4 ADR. 4 times its average daily range it's moved against me. And I've lost probably 0.75% of my account. Is that gambling? Being in a trade for 3/4 of a month and losing 0.75% of my account. Gambling, is it? It's risk management. Just taking another trade right now. Just had a reverse alert on M5. Literally, I've just added to this losing position. Yeah. Everybody, every course out there tells you not to add to losing positions, because what they are expecting you to do is risk 1 to 2% of your account every time you take a trade. I don't do that. I risk 0.2% of my account every time I take a trade, which means that I can stay in a trade for months if I need to, waiting for the market to correct itself. There's a massive difference between gambling and never using a stop loss and adding to losing positions than trading a position over a period of time for a positive return. But you will never stop the people on Telegram, YouTube, and Facebook and everywhere going, you're an idiot, you're a gambler, and I don't give a monkeys. I sit here in a nice house with a very small mortgage and a 6-figure income. You're looking at a YouTube channel trying to learn how to trade, and they're the ones that tell me I can't do it and I'm doing it wrong. 95% of the courses tell you to risk 1% of your account by putting an order in the market that the bank is 95% guaranteed to hunt. Why would you do that? To me, that's ludicrous, only because I've done it for 10 years and I realized it's stupid. And then I looked at what the banks did and realized that they didn't do that. So I did the opposite to what everybody else does, and suddenly you make money. Is it gambling? Yeah. I guess it's gambling. I don't know. Class it what you will. It's one of those things that you're never going to have an answer to, and everybody's going to disagree. And the reason it's good is I need people to disagree with me, and I need people to use a stop loss, because as long as people keep using stop losses, the market will keep hunting their stops. And I need the market to hunt the stops so that it moves up and down, because that's how I make my money. So carry on, retail crowd. 75% of you will carry on losing your money. Thank you very much. And I will put it in my bank account. Anywho, everybody's going to disagree with that. Are the blue line fair value gaps? No. I don't know what a fair value gap is. It's something to do with ICT. I don't trade ICT. This is a propulsion gap, or a wide range bar, they're called. They were invented about 25 years ago by a guy called M.A. Perry. Other people have used similar concepts and renamed them, and I don't know the official definition of a fair value gap, but this is basically a propulsion candle where there's been a large amount of institutional buying. That's what a fair value gap is. I kind of think it probably is. I don't know. You need to go and look at ICT's official definition of it. The push strat at sorry, I can't read that, Belingo. The push strat at Sime time and turned at lunchtime. Confused.com. Colonel Pinecone. It's mindless gambling that's best avoided. Fruit machines and scratch cards, etc. Yeah. At least I've got a strategy for gambling. But then again, people have strategies for gambling, don't they? Professional gamblers and professional poker players. Yeah. You put the word professional in front of something and it makes you an expert at it. What it doesn't mean is that you're not going to lose money. I'm a professional trader. I still lose money. All professional traders lose money. All professional bankers lose money. All professional everything cocks it up. Professional brain surgeons screw up. Professional pilots crash planes. Yeah, put the word professional gambler in front of gambling. It's still gambling at the end of the day, isn't it? It's a 50-50 outcome game that we're playing, and that's what the odds are. If possible, it would be nice if you put the name of strategy under the symbol and time frame label. What do you mean the name of strategy? You can put whatever you like there. Just text. Hello. Okay. It's just text. I can't put the name of a strategy on here because, well, everything you see here is H1M5. Everything I'm showing you here is H1M5. That's what you mean. Morning, Brian. Gay Rat, what I like in your approach is that you're honest about how to predict the price moves. What you mean that I can't predict the price moves? It's not an approach, it's just fact. Yeah, all the guys you look at, if you go and watch any YouTube channel out there of someone telling you where price is going to go, they're lying. Because unless they have one of these things, they don't know where price is going. At all. Do they? Really? You can predict anything. I can predict the future. I can predict that. And I can predict anything. Whether it's going to come true, I have no idea. That's the whole purpose of my course, is teaching you that you cannot predict this. So stop trying. All you need is a strategy that extracts money from the market when the market moves are favorable, but doesn't lose money when the market moves are unfavorable. All I've done is removed the losing trades from my trading. I haven't become a better trader. I'm no better at predicting price than anybody. There's a lot of people out there that are way better at getting in and predicting trades and directions and timing and stuff than I am. I'm crap at it. So all I've done is developed a strategy, which means I don't need to be an expert in that bit. I need to be an expert in risk management, and I need to understand market movement and fundamentals. That's all I do. I haven't got a clue where it's going. No one has. That's the honest bit. That's what I teach in the bootcamp. And if people don't like it, and a lot of people don't like it, look at my Telegram, look at my YouTube channel. I've got 8,500 subscribers. People like Roger Banks have got 100,000. He sells courses and he's got a brokerage. Yeah. Is he any better at predicting price movement than I am? I haven't got a clue. Don't know. But I come on here and I show exactly what I'm doing and how I'm doing it and why I'm doing it. And it works. That's all I know. I'm no good at it. If I was good at it, I wouldn't need to do it in this way, would I? This is the thing. And that's why I teach people, because every person I've ever come across in this industry over the 15 years I've been doing this has struggled to get entries into the market and pick the direction of the market. And I know why. Because you can't, can you? If you could do that, you'd be billionaires and none of you'd be sitting here. I wouldn't be sitting here, would I? None of us would. So if you stop trying, as soon as you flick the switch and go, I'm not going to do that anymore, I'm just going to get in. Oh, look, it came back in my favor and I got out. Right now, I could close out $238, $200, $170. Is it the right time to close it? I've no idea. I don't know if it's going up or down. But right now, I know that if I'd have used a stop loss in every single one of those positions, they would all have lost me a percentage of my account. That's the only fact I know. When the market starts a new candle, it will go up or down. That's all I know. There's only three outcomes to a candle. It can be a bullish candle, if you start there. It can be a bearish candle, or it can be an inside bar on the previous one. That's a really bad drawing. Draw it again. Look. There's a candle, right? So the outcomes of the next candle are going to be either bullish, bearish, or inside of that one. Or it could be outside of that one. So basically, it's a bull, a bear, or an indecision. That's all. That's the only three things that can happen. Look at every candlestick. I can guarantee 100% every single one of them is either bullish, bearish, or indecision. How could I possibly predict whether the next candle, this one here, how can I predict whether that's going to be bullish, bearish, or an inside or an outside bar? Stop trying to predict that, and you'll all of a sudden, it just all clicks into place. Really simple. Hopefully I make it simple anyway. How much does it cost to stay in the trade? Overnight fees. varies on your broker, doesn't it? Swaps. Don't know that much. I don't know. I don't pay any attention to it. Doesn't matter, does it? Less than I make. You haven't got any control over swaps. So don't try. Again, I get asked this question a lot by people. Where should I put my VPS? Because I want to get the best execution to my broker. Antarctica. Because it's got no impact whatsoever. Stop worrying about stuff that you can't control. You can't control commissions. You can't control spreads. You can't control the execution time between your computer and your broker. You can if you want to, if you can be asked, but it will make the difference of probably a meal out a year. Everybody's worrying about the details. Stop worrying about details. It doesn't matter. That is so true. Perfect market is the same price all the time. Yeah. A market can't exist without disagreement. And the reason this thing moves up and down is because of disagreement and greed. Yeah. If everybody, like oil, right? If in the oil market everybody agreed that the price of oil was going to be 79.66, that would just flatline. Yeah. There are greedy Saudis who want the price to go up. There are greedy consumers who want the price of petrol to come down. Therefore, there are opposing influences, which is why we have a market. When you go into the market and you buy an apple, there's a guy that's got a load of apples that wants to sell you apples. If he can get the right price and you're happy to pay that price, you'll get an apple and he'll sell you an apple. If his apples are too expensive, you won't buy them and he'll have to drop the price of his apples. It's a market. All a market is an inefficiency between a buying party and a selling party that creates a differential in price, which is caused in the Forex markets by fundamentals that shift price and direction up and down. What happens within that thing is out of everybody's control. So, risk is a gamble. Risk of ruin is another subject for another day. Yeah. Yeah, there's a risk of ruin on everything. Yeah, there's a risk that a nuclear missile will be launched from Russia over to America. Do you think my account is going to survive? No, it's going to blow. But it might not blow. It might absolutely fly and make me a fortune. I've no idea. It's more likely it will blow. There's a risk of ruin. I had a stop loss in place when the Swiss cap was removed in 2015. The account blew. I had a stop loss in place, but the account blew. Doesn't matter what you do in this market. If the market wants to kill you, it'll kill you. So stop worrying about it and just get on with it. I've lived through everything in this thing, and it doesn't matter what you do. You can't predict anything. You just have to extract money when it's there and get in. The only way you can get in is by having risk on the table, drawdown. You just wait for the drawdown to become positive, and then you remove it from your account and put it into real cash that you can pull out. Dave Newson wrote a book called No Easy Money. Yeah, very true words. Larry Williams's book. I keep talking about Larry Williams's book. You know, I mean, it's one of the best books out there, and the title is so deceptive. It's got it here, there. It's the most deceptive book title in the world because it promises you. It promises you that he was going to teach you the long-term secrets to short-term trading, i.e. day trading. But the outcome of the book is that you can't do this. It doesn't work. So the long-term secret is not to do this. It's to do that. Trading. Long-term trading is how you make money, not short-term. So what I do is I get in for the long term. Very simple. The pound CAD I decided to go long on because it got extended down there, because I identified that a lot of the time when it gets down there, quite often it goes back up. Sometimes it doesn't. In this case, it didn't. So I took a little bit of a loss, tried again, and got out of those two there with a profit. That's a 3-day move. It's a long-term trade. A short-term trade is something you get into and get out of on the same day. But because you can't predict intraday price movement, because it's a 50-50 shot of going up or down, you can't actually make money doing it. But that's what everybody wants to do, because the only way you're going to buy a Lamborghini is by making money on things you can extract lots of cash from very, very quickly intraday. Larry Williams couldn't figure it out, and don't know anybody that has, to be honest. Oh boy, the gambling conversation. Yeah, Brian, you've missed it. It's been a big one today. To predict, you need to be a market maker, have a big computer, and front run. You can't even predict it, right? I've got I keep calling him a friend. He's not really a friend. He's a colleague that I met through a trading group who used to work at Barclays, and he worked on multiple desks at Barclays, doing multiple jobs. Started as an intern, worked his way up, and he's worked on a market maker desk. He's worked on the speculative desk. He's worked on the commercial desk. He's worked everywhere in Barclays, right? And this is where I keep coming back to this thing. I don't keep coming back to it, but this thing that's called IPDA that is flying around. He's never heard of it. The interbank price delivery algorithm, or whatever it is, doesn't exist as far as Barclays are concerned, as he's concerned anyway. But he used to work on the market maker desk. And again, going back to the way that the market works, right? If Barclays market maker desk is sitting there with 25 million to execute long, right? Something else just got banked then. Didn't see what it was. And HSBC, so that's Barclays, that's HSBC, right? If they're sitting there with 35 million to go short on their market maker desk, which way's price going today? Down. So does the Barclays market maker have any way of manipulating price up today? No, because he's going to get run over. So it doesn't matter if you're a market maker, you still can't predict price. Yeah. The guys working on the speculative desks in Barclays have the power to execute orders and drive a candlestick, which will take this candlestick, to move this candlestick will have taken millions and millions of pounds in transactions to get that candlestick to look like that. That can come down just as fast because someone on the opposite side of it doesn't want price there, or they have an order to execute for a large conglomerate or something that needs a very, very short position entered on the pound CAD. That will come down to there. Barclays have moved it up to there because the CPI figures have gone up instead of down. Yeah. But if HSBC have got to execute a massive pound transaction for Microsoft this afternoon, this thing's going to come all the way back down to there, and the fundamentals are going to mean absolutely nothing. The Barclays market maker desk can't do anything about that. They haven't got enough funds. No one can predict it. The banks are all sitting there fighting each other, making money between each other because they have the ability to move the market. And this is why I got killed today on the DAX. Why did I get killed today on the DAX? Because there is equilibrium. There is balance. The market is happy to transact stocks in this range today. Therefore, I get killed. The banks will also be killed in this range because they'll be trying to grab movement up there and they can't get it. And they will also be killed in this range. But what they can't do is control the price. Your channel is the best one I've found on YouTube. Most charge a fee. They do. Larry Williams is a historical trader. Yeah. Well, historical in the fact that he has been trading a long time. Yeah. The market, his strategies still work today. Larry Williams' strategies still work today. Because his strategies are not based around trying to time the market. The strategies are based around extracting money from something that has a random price movement. Not trying to pick a top and bottom and what everybody does, which is, again, it's all covered in the bootcamp. Why everybody fails. There's about 10, 15 reasons everybody fails, and they're all around one thing, timing. One thing you can't time is the market. So stop trying to time the market and all of a sudden it works. Henry, if I wanted to take TPs daily from mean reversion, what time frame gaps would you aim for? Do you mean propulsion gaps? Well, you can't take TPs daily unless price gets there. So it's up to you. I mean, that's a target. That these will be hit. That's going to get hit. That's going to get hit. I don't know when. You can't time. You can't do that. If you drop down to 5 minute and say, right, I'm going to target, or 15 minute and say I'm going to target this one or this one, it's not going to get there, is it? Because ADR is there. So there's a 58% chance that we're not going to get beyond that level. So the only target you've got today intraday is that. Yeah, when you're targeting, if you want to get out of with a TP today, the only thing you can do is hope that it goes there. This thing could move up there and sit there for the entire rest of the day and never get to there. So therefore, you can't TP. What you're asking, Henry, is how can I force the market to move to a level that makes me a profit? Think about what you're saying. If I want to take TPs daily from mean reversion, what time frame gaps should I aim for? The one that's profitable. If you get in here, aim for anything below that line. If you get in there, aim for anything below that line. What do you target? You target profit. Can't answer that question, can I? Because I don't know where an entry is and I don't know where an exit needs to be. So right now on Euro Pound, for example, I'm out. I've just got out of that one. Euro New Zealand, right now, I can get out with a profit because it's below my entry. There's no way I can tell where this is going. There's no propulsion gaps in play. Why does it do it on that? It's to do with changing instrument. So if I change instrument, the gap doesn't calculate. If I change time frame, the gap does calculate. I'm just troubleshooting this indicator. I've broken it and I'm trying to figure out the logic as to why I can't. Something for me to worry about. Not a good day to be a breakout trader on the DAX. Tell me about it, Diamond. Look at my P&L. It is a good day to be shorting oil, though, I reckon. All right, I'm long. I might be able to scrape back 300. I might be able to scrape back a third of this. We're going to need some. You need some movement, though. Not convinced today at all. I'm an extremely good teacher. I only teach logic. Managed to scrape back most of the opening loss, still down 0.14 on the day. Yeah, I'm not. I'm down a lot more. Just found download PDF copy of William's book, More Weekend Homework. Yeah. There's always PDF copies of everything out there. That's why there's no point in selling courses. As soon as you put a course up for sale, first person that watches it, screen records it, shares it with their mates, and it's all out there. What's the point? Education is just free. Why try and charge for it? If price can be controlled by the banks or whoever, then we will see a lot of currencies just crash. What is stopping a group of banks driving a currency into the ground? The other banks. It just doesn't work that way. You won't be able to do that. Regulation for a start. So all markets have regulatory bodies, and all markets have stops. This is why you see the New York Stock Exchange stop trading every now and again if it hits a certain percentage change. The Nasdaq has a percentage change that it hits, and it will stop trading. The banks and they're regulated. You can't do that. Afisi, stop trying to be a doomsayer. It's not going to happen. If you've got that kind of mentality towards it, like the conspiracy theorist mentality, you're never going to make it in this industry. It's just not going to happen. You've got to forget conspiracy theories, because conspiracy theories can't be controlled. Yeah. There's a video on the website. Go and watch this video. Best video you'll ever watch in trading. And it's got the crappiest thumbnail, which I am going to update at some point. Go and watch that. If you try and control something that's uncontrollable, you'll lose. If you think there's a conspiracy that the banks can do something, then it doesn't matter. Is there? If there is a conspiracy, there's nothing you can do about it. So stop focusing on the conspiracy and focus on the solution to extract the money with the conspiracy. So if you think that the banks can do something and you don't like it, forget about it and just figure out how to extract money out of it. Yeah. PMA, positive mental attitude. Swiss yen broken through its weekly high. It has just. So all these yen pairs at the moment are very, very, very weak. Just scaled out some US dollar yen. New Zealand dollar yen is weak. So we've got a weak New Zealand by the looks of things. Euro, Swiss, CAD just approaching yesterday's high. Aussie dollar yen just rejected yesterday's high. So not a massive move, but this week is worse than summer trading. Yeah, I know. It has been. Look at this. No weeklies, no monthlies. This month is worse than summer trading. Look at it. We've had one monthly hit. We're on the 19th. We've had one. Really crap at the minute. Gold has had a decent drop. Yeah, so we've got US dollar strength. Yeah. Euro US dollar coming down probably, and pound US dollar might be coming down. I doubt it. Oh, it is. So yeah, big strong pound US dollar at the moment. Driving that down, ADR. Look, so there's your ADR hit on gold. So as I said, more downside targets than upside. But unemployment is basically what's going to drive this tomorrow. So that's what we need to focus on. What's going to happen with the unemployment? In two minds about trading it. Just don't like the spreads. Don't trade it then, Tony. There's 28 Forex pairs out there, which you can trade. So you're better off focusing on the ones that that you want to trade. Oil and things like that. Only trade it if you really understand it and you think there is an edge there. So the only reason I'm trading oil today on this account, does that just stop me out? Tiny little stop out again, look. The only reason I'm trading oil short here is because I think there is an edge on that. I don't really understand how it moves, and it doesn't make any logical sense when you get with like 3:30 this afternoon. We're going to have the crude oil inventories. Doesn't make any logical sense when the crude oil inventories come out. If the inventories are bigger than expected, you would expect that to drop price, but it doesn't. You expect it to. It just doesn't do what you would expect it to do. So the fundamental drivers, I don't really understand. I understand the supply demand concepts with oil, but what actually drives the price of oil, I don't really understand fully, so I don't trade it. However, I know that gaps get filled. I don't know if I'm going to time this right. I'm obviously, because I can't control the timing, but the size speed of that drop, if we can survive a pullback on that move. So if you put a fib on this pair, that high down to there, yeah, that's your 61.8 retracement. So if we are going to do a deep pullback before we go for the gap fill, I'm safe. That's about as logical as I get when I use a stop loss, because there's absolutely no reason why this won't do that and then go and do that. It could do anything, because obviously I have no control over what it does. So all you can do when you use a stop loss is put it as far away as you can possibly stomach to actually make a profit on the trade. But no idea. But risk reward on it is 24.33 and 24.28. So just over 1R on 1.5%. We'll see. I got 28 pairs and gold ain't one. Good tune. Someone must have done a meme about that, surely. I got 28 problems and ain't one. Right, I'm going to go and try and fix this indicator because I screwed it. So everything's that's that account. One sec. Really slow, this E8 one. So ADR's just taking some drawdown control on ADR, 0.35% on the ADR set file. H1 we banked 0.5%. H4 done some drawdown control as well, because all these yens basically we're yen exposed long, and there's a drawdown control there again, mainly on the yens. So we need some yen movement. We need some strength in the yen basically to help out a lot of these positions. Right, I'll leave it there. Anything you need, let me know. I'll be in the Telegram group. I'm back this afternoon at 2:20. We'll be back tomorrow morning at 7:50 for the Frankfurt session. Back 2:20 this afternoon for New York. Have a look at the Dow. See if I can make some money at the Dow. Fingers crossed. Yeah, just monitor obviously what everything's doing. So anything you need, let me know. I'll be in Telegram. I will work on this indicator and see if I can fix it. I keep breaking things. Could have taken a backup. Anywho, so I'll sort that out and I'll let you know when that's ready to go. I will be back this afternoon, 2:20. See you then. If not, tomorrow morning. Have a good one.